Hi, it's Dave. So I had the chance to chat with Yassine Elmandjra. He is an analyst with ARK Invest who covers Bitcoin, cryptocurrency, and blockchain. Now, I've had a lot of viewers actually encourage me to reach out to Yassine because he has just a lot of knowledge, right, on Bitcoin and that area. And personally, I've had a lot of long-term skepticism or doubts about Bitcoin that I wanted to kind of clear up and really try to dive into further. This video is actually quite long. It's over 2 hours long. And I'm going to add timestamps in the video description below so you can just skip to different sections if you need be. However, I think Bitcoin as a topic is extremely fascinating and important to discuss and really understand more on a fundamental level. And because of that, I think this is actually a very valuable video because I don't really hear, right, many conversations really diving into, right, so many facets of Bitcoin and trying to analyze it from really a first principles point of view. So anyways, I hope you enjoy this video. All right, I'm joined here by Yassine Elmandjra, and he's a thematic analyst at ARK Invest, and he focuses on Bitcoin, blockchain, cryptocurrencies. And I'm excited to talk with Yassine. I want to welcome you to the show. Thank you.
Thanks for having me, Dave.
Yeah, I'm looking forward to this. I'm really wanting to dive deep into kind of the essence of Bitcoin and crypto. I shared with you before in our messages, I do have some doubts and some skepticism on the long-term kind of things with Bitcoin. So I wanted to kind of use this as kind of a learning session, but also as like kind of a discussion time. So it's not going to be kind of the typical just like formal interview, but I really want to dive into some of these like, I think, core fundamental issues that I think Bitcoin might have going forward. But I want to clarify a few things. First is, I'm not like a Bitcoin bear by any means, especially short term, because I totally understand the thesis of demand rising, people being interested in cryptos, in Bitcoin, institutions coming on board. And so I think it's really difficult to really nail the short term pricing. And my interest is more on the thinking level, the fundamental kind of like the philosophical what is Bitcoin? What is its advantages, disadvantages fundamentally? And I want to talk about kind of what people usually aren't talking about. And hopefully it's going to shed light because I think, I've heard a lot of recommendations that you're one of the best here to really shed light on Bitcoin. So I've got like 5 or 6 kind of fundamental challenges that I've written down. And they're kind of doubts or and I call it borders fallacies on some ways with the fundamental Bitcoin argument. I want to hear your thought. I want to learn and explore kind of these issues if you're okay with that.
Absolutely. I've listened to a few of your interviews high level. I watched the interview with Pomp, and I will say that from my understanding of your understanding, it seems like you do have a pretty strong understanding of Bitcoin, and the questions that you raise are really, out of curiosity for your own understanding more than it is a critique of Bitcoin. So, I'm definitely happy to have this discussion. I don't know if I'm going to have the answers to all of your questions. And in fact, your concerns, I will preface this entire conversation by saying that they're probably legitimate. And so, there's no, we're both in this discovery phase of Bitcoin. But happy to shed light on some of these concerns, and hopefully we can get somewhere, and I can learn something as well.
Awesome, man. Yeah, like I'm actually a big believer in the ethos of Bitcoin on the decentralized part. I have concerns over the future of our society and overreach on government. I think Bitcoin has some interesting possibilities. However, I do have some fundamental issues. So the first kind of issue is the issue of scarcity. So I'm calling it, and I've written this down. I'm calling it the fallacy of Bitcoin scarcity, and I hear this going around all the time. Almost every single Bitcoin, channel, podcast, article talks about this scarcity argument. Bitcoin is truly scarce, and some people will take it to extreme, like Bitcoin is the only true scarce asset, which I think is a bit extreme. But I want to examine this issue of scarcity because I don't think Bitcoin really is that much scarcer than any other, let's say, ownership in some type of company, for example. Let's take Tesla shares. Tesla has a certain number of outstanding shares. It really doesn't matter how many outstanding shares they have, whether they have 1 million or 1 billion. It's like that's irrelevant because the point is it's the market size, it's the total ownership of the company. That's really scarce, meaning who owns the company, right? The percent of what you own in the company is truly scarce in that sense. I don't think Bitcoin is any more scarce than the ownership of Tesla that people have in Tesla. Like, what are your thoughts with that?
Yeah, I mean, my thoughts there. Let's just take a step back and compare Tesla to Bitcoin and see, what that scarcity argument really presents in the context of Bitcoin. I think a lot of Bitcoin enthusiasts mention this scarcity, not so much in how much Bitcoin there is, but in the context of Bitcoin being a monetary asset. Because I have this wrapper right here that's a little chocolate bar, and this chocolate bar itself is also very scarce. There's only one, and it can't be replicated, and I have it, and I have ownership of it. And the question is, does anyone else really want this, and are there intrinsic properties that might drive demand to have this? So that's kind of the first, I would say, backdrop of why discuss scarcity in the first place. The second is really when you think about what Bitcoin is as an asset, it's much different than an asset like Tesla, particularly from a value accrual standpoint, right? When you think of the rise of Bitcoin as this sort of non-productive commodity-like money, what is most important to drive value is the quote unquote monetary assurances that something like Bitcoin could provide. Whether that is the fact that it is divisible or fungible or transferable, but more importantly, that it has a predictable monetary policy. Bitcoin's monetary policy happens to be this sort of logarithmic, asymptotic monetary policy that basically tails out at 21 million. But where people really kind of find Bitcoin's value proposition is less so in the scarcity, but more so in the predictability of monetary policy. Now, when I compare that to something like Tesla, well, you can think of one, the Tesla share doesn't accrue value based on its sort of scarcity, right? It accrues value based on the future cash flows that Tesla is kind of promising its shareholders. But Tesla, as a centralized entity, has the discretion to issue more shares, has the discretion to dilute existing shareholders. So I think that coming at this from a scarcity for scarcity's sake, just like this wrapper is scarce, is sort of misleading in trying to present what Bitcoin's value proposition actually is.
Okay, so I want to dissect this a bit more.
Sure.
And this is going to be interesting. So let's take, for example, let's make an assumption right now, just for the argument's sake. Let's take out the Bitcoin as currency argument, and let's say Bitcoin as an asset. Okay, if we compare Bitcoin with an asset, let's remove the whole monetary, aspect. Bitcoin as an asset, is it really any more scarce than Tesla shares as an asset? Meaning, for example, a few things on this. One is the total market cap of Tesla, the outstanding value, right, is scarce in that sense. No matter how it's the pie, right? The scarcity is the pie. It's not necessarily each individual share. Same thing with Bitcoin. Isn't the scarcity of Bitcoin really the pie, the overall network?
Yes. Okay, that's a great question. So I think, again, the idea of Bitcoin, you can't look at Bitcoin's scarcity in isolation. You have to look at the idea of Bitcoin being a provably scarce asset that no single entity issues. And it's the combination of scarcity combined with no one really owns the issuance aspect of that scarcity. And in fact, it's backed by very hard to break math and economic incentives that makes it so much different than something like a Tesla, and is why we're not even why it's like an apples to oranges comparison. You really can't compare a public equity that is issued by a single entity that trades on the stock exchange, that has a team, that has clear reconciliation to cash flows in determining that valuation, as a comparison with a non-sovereign, stateless, borderless asset in Bitcoin that has no kind of single entity, that has no single issuer, and yet cannot be copied. The units themselves cannot be replicated or copied. And so taking Bitcoin's scarcity in isolation is, I agree with you, absolutely pointless and no more scarcer than any other asset But taking it in the context of the scarcity and how that scarcity is derived and how users can benefit from that scarcity is an entirely different conversation.
Okay, but isn't a lot of that scare? Okay, so for example, if I was to say with Tesla, the board made a rule: we will never ever issue any more shares of Tesla forever, and we cannot raise any more shares. Can't give more shares. You can't divide more shares. It's even less, scarce than Bitcoin in terms of its future issuance, right?
For sure. And again, I'm going to go back to this wrapper. I promise you, I will never try to make a copy of this wrapper, and I will never, share it with anyone, and I'm going to keep it to myself. Mm-hmm. Just like, I want to even give you an even, starker example of the idea that, our monetary policy today, right, where we were in the 1971 on the gold standard and we got removed, and we're like, oh, we promise this is only a temporary thing and we're not going to inflate our currency and we're not going to print money at will. And we promise that it is in your best interest to use our fiat currency as a savings vehicle. The whole idea of Bitcoin, and you were alluding to, you resonating with the ethos of Bitcoin, is not even giving the optionality for a human to make a decision about anything related to the network. And that is, I would argue, Bitcoin's primary value proposition, is that, yes, Elon Musk and Tesla shareholders and the board of directors may be reliable people. And I don't doubt that. The whole idea of Bitcoin is, let us not even give them the option to make that decision. Let us not, have to rely on their promises to be assured that this institution is going to act in a way that I expect it to act in. Mm-hmm. And so, I'll extend that to kind of the broader analogy of the trust-based model more broadly has failed to provide kind of predictable assurances, not just in a monetary context, but in general. Like, the institutions that rely on human decision-making are only as reliable as the human that is making that decision. And so I agree with you, and in a very similar fashion, how a lot of people in developed countries are saying, well, yeah, the U.S. government is powerful and reliable, and they're not going to inflate our money away. But, you can say that about emerging markets in developing countries who, 20 years ago were saying the exact same thing. So eliminating that optionality is what Bitcoin's value proposition is.
I get it, but it seems like it's continuously linked to monetary policy. Right.
Yeah,
that's what I'm saying. If you take that out of the equation, if you assume it's not a currency, right?
Yeah.
It's not. It doesn't have that monetary value. It's just an asset in that sense.
Okay.
In that case, isn't the scarcity just purely based on demand? Meaning, it's just like the pie. It's the pie. Every company is a pie. Every cryptocurrency is a pie, right? The market cap of the total network. And so Bitcoin is just another pie. The scarcity, there is no true scarcity in Bitcoin as a network. It's only as scarce as any other pie, any other company, or any other cryptocurrency.
I can concede that. There's no issue. Again, but my point is that the way in which scarcity is derived in Bitcoin versus Tesla is why Bitcoin is so interesting.
Okay. But a lot of that scarcity is on how the pie is divided. Is that not correct?
Can you elaborate on that?
So you have the market cap of Bitcoin as a network, right?
Yes.
$350 billion or whatever.
Sure.
Now, the whole scarcity argument that everyone is propagating in the Bitcoin community is that, if the number of new coins is limited, it's going to stop in the future, et cetera. So therefore, 21 million coins, whatever.
Yep.
The whole argument is simply that the way the pie is divided is not going to be divided anymore. It's just the way the slices are chopped. It's not really a true scarcity argument. It's just saying the way the pie of Bitcoin network is sliced is just going to be the same. That's the essence of it, right?
So I'm not I don't know if I fully understand your point of like the way the pie is divided. What I guess maybe clarifying that. Yes. So there are 21 million. There's going to be a cap of 21 million Bitcoin ever minted or created. Do we agree on that?
Yeah, and that's what I'm saying.
Okay.
All that is 21 million tiny pieces of the
Correct.
Bitcoin pie.
Exactly. 21
Yeah.
21 million, but that 21 million, to your point, is infinitely divisible.
Well,
right?
No, what I'm saying is that the pie itself is still a pie. It's just the Bitcoin, the value of the Bitcoin network. Just like there's a value of the Ethereum network, just like there's a value of Tesla as a company.
What would you would you consider? I want to bring the monetary or currency aspect back into it, just because I think it's. Would you consider something like gold scarce?
Okay, so
Yeah.
I would say that like gold is as scarce as like, for example, we're moving it now into, let's say, physical commodities, let's say oil
Okay.
or gold
Yeah.
or silver,
Yeah.
right? There is a sense of like the scarcity of gold. In my opinion, it's twofold. One is, sure, you could discover new gold, right?
Yeah.
In the ground, asteroid or whatever people are saying nowadays, or silver or anything, out there. So there is a certain level of unknown of how much, right, that commodity will come online, right? But then I would say actually the greater factor in that scarcity really is the demand. Like, for example, let's say you have an art piece that's truly scarce, right? You have a Van Gogh art piece. The thing is, what makes it scarce is the demand. For example, if an unknown artist
What
has an
makes it
art,
valuable is the demand.
yeah,
What accrues value is the demand,
yeah,
in
but
which scarcity happens to be a property by which that demand is driven, right?
yeah, what I'm saying though is scarcity by
Yeah.
itself means almost nothing. For example,
I agree. I agree.
an unknown artist has only 10 paintings, but no one wants those paintings. They're scarce, but they're totally worthless, right?
Totally. And I think all Bitcoiners that, I'm familiar with would completely agree with your point, which is exactly why when you say something like Litecoin has the same predictability of monetary policy as Bitcoin, we're going to say, yeah, well, it's nowhere near as valuable. And they have the exact same, they're capped out at the exact same number of units or Zcash or whatever it is. And so I totally agree that scarcity, and I would actually extend that to be just predictability of monetary policy, is necessary but insufficient as a full-on kind of value accrual mechanism.
Mhm.
The whole point is that you cannot create more Bitcoin than what has already been dictated in the rules of Bitcoin.
Okay.
You can, yeah.
Okay. So let's
Yeah,
dive
yeah.
into this a bit because
Okay,
I
sure.
mean, I hear that a lot
Yeah.
saying, oh, you can't
Okay.
create more Bitcoin. What if
Yeah.
all of the miners, let's say
Yeah.
100% of the miners in
Yeah.
the world,
Yeah.
all came together and said, hey, let's do a 10-for-1 split? Would that be possible?
A 10-for-1 split. What? No, I don't. No, that wouldn't be possible. No. That. So yeah, maybe take a step back and explain exactly what the miner's role in this in like the ecosystem is. Miners are regardless of how many miners or how much compute power, or whether the miners are in China or in the United States or Finland, the number of Bitcoin that is going to be issued remains constant at a constant rate, regardless of however many miners, however much compute power is dedicated to the Bitcoin network. So that's a slight kind of paradigm shift from what you see in gold, for example, right? Where if you had 50x the number of gold miners you had today, inflation rate would probably increase at a greater rate than what it is today. With Bitcoin and kind of the economics behind the Bitcoin network is that miners are only there to provide a service to the network. That service is both securing the network in the form of computational power so that transactions cannot be rewritten, and facilitating the transfer of those transactions by including them in a block. That block, by design, no matter what, averages basically 10 minutes per block, or there's a block that's created about 10 minutes, and that is regardless of the amount of compute that miners dedicate to the network. And that block has a finite block reward that miners are compensated for their services. And so to think that, so there's no kind of collusion that miners can go through where they say, we're going to include 12 or 15 Bitcoin instead of the 6.25 that there are today in each block.
Oh, yeah,
And
I'm
then
not talking about that.
Yeah. Okay.
Yeah, I'm not talking about adding like the number of new Bitcoins, but
Okay.
like, I mean, I would imagine there would be some scenarios where, if there were enough, not just miners, but also the major holders, like
Yeah.
could do a major fork, they could renumerate the types on a new fork, how much Bitcoin is worth. I mean, there's different scenarios, right, that are possible in play. I'm not saying that they're likely.
Sure. No,
but
you're right.
yeah.
You're absolutely right. And that's a good point. And that's something that, we've actually seen happen, which was really interesting back in 2017. There was a whole debate between Bitcoin and, if you're familiar with Bitcoin Cash, right? And that was around kind of scaling, where, blocks were too small, Bitcoin is too slow, it facilitates not enough transactions, and look at that compared to Visa. We need to make bigger blocks. But of course, those bigger blocks, and we can get into this, but come at the cost of being able to verify a full node, which comes at the cost of decentralization. And what we saw in the aftermath of that is the software alone is not what determines the value of the network. You can fork Bitcoin. I can fork Bitcoin. We can together say, you know what, Bitcoin kind of sucks. Let's just do our own thing. And that will get us as far as just having software that looks like Bitcoin. But when you talk about the network effects, when you talk about the recognizability, the infrastructure that Bitcoin has been built around, forking the network, and particularly to your point of trying to perhaps change the monetary policy to benefit miners, you'll have a very difficult time convincing these longer term holders in which something like the scarcity is a Schelling point. I'll finish this comment by saying that I agree that the idea of Bitcoin being scarce, and that's sometimes, to the Bitcoin advocates' fault, is not really the value proposition or the lone value proposition that we should be focused on. There are a lot of arguments to be made that people, controversially say where, Bitcoin might have actually been better off with a tail inflation of, let's say, 0.5% or 1% Bitcoin in perpetuity. But the point is that the predictability of that inflation or of that issuance rate and how that issuance rate is derived, not by an Elon Musk deciding to issue shares or promising that he will never issue shares, but by this like uncontrollable beast that everyone relies on and everyone can agree on, is really where Bitcoin's interest, and at least for my investment thesis and for my understanding of Bitcoin, that's really where the interest lies.
Okay, so this is interesting because I would take a step and I would argue that the whole you have the pie, the value of the pie, which I'm saying Bitcoin as a network is valued something, Ethereum is valued something, every crypto, every company in the world is valued something, and the scarcity of Bitcoin is really just how each pie is formed, how big each pie is. I would say, that to me is in the essence kind of the scarcity argument, in my opinion, of Bitcoin. Yeah. But I want to move on from that a bit because sure. I think a lot of this is linked to monetary policy or Bitcoin as a currency. Because the whole argument is because Bitcoin is kind of presenting itself as kind of almost a separate currency type of system, a hedge against fiat. Now they're trying to, make this an analogy that, Bitcoin has a so-called monetary policy, right? And therefore, and it doesn't, create new currency, right? As fast as, let's say, fiat government can create or does create new currency. And in my opinion, there's a few things wrong with this. First off, this whole monetary policy of Bitcoin, it sounds kind of created. It's like, for example, it's almost like, I wouldn't say Tesla creating a monetary policy for their shares, but it's like you have to make some assumptions here. You have to make an assumption that Bitcoin is a currency, right? But then when I look at Bitcoin, there's a few arguments against Bitcoin as a currency. Of course, there's a whole argument of volatility, which I want to talk about later. But one of the stronger arguments against Bitcoin as a currency is this whole thing of there are lots of different types of assets that could be used as a currency, as long as technology gives kind of a 24/7 access marketplace to determine its value. One example is you can take almost any major commodity out there that has stability, and you could say, that could be a currency if you just peg a 24/7 type of marketplace to that currency, because you can peg a unit of value to goods off of that. You could have transferability. You could transfer those funds, let's say, what I'm saying is a lot of the internet and a lot of digital technologies and bringing online the 24/7 kind of marketplace of certain assets can actually serve as a similar type of concept that Bitcoiners are trying to achieve, which is like, hey, we can use Bitcoin as a currency. But then you have also, in addition, Bitcoin as a currency has major challenges as being a medium of exchange. It just has such inefficiencies because they're trying to be a decentralized ledger. It's just the amount of energy used in the proof of work is just kind of precludes it from being able to be used as a true medium of exchange. So what are your thoughts with that kind of Bitcoin as a currency? I mean, what's the strongest?
A lot to unpack there. I think that you
Exactly.
definitely touched on some interesting points.
Yeah,
some overlap, some I think are a little bit separate. Yeah, go ahead, finish your question, and then I'd be happy.
What's the strongest argument that Bitcoin is a currency over, let's say, other commodity assets that can become very similar? Just add a 24/7, digital marketplace to it, and you can call it a currency. It could be even more stable than Bitcoin, and it could be even probably more efficient too. You don't have, the proof of work, energy consumption challenges either.
Yeah. Okay. That's good. Those are all great questions. I think let's address your first point on pegging like a commodity to some sort of exchange and having that be with Bitcoin, like having it be more efficient than Bitcoin. Before that, I'd like to ask you a question. What do you think is Bitcoin's primary value proposition? Because I've listened to your podcast with Pomp, and you explained very eloquently kind of the decentralized ethos of Bitcoin, and how it's almost like this digital bearer asset that, to your point, doesn't actually need a peg. And that's why it's so valuable, is that you don't, with something like gold or something like silver, yes, you can have some sort of commodity that's backed in some sort of reserve and have people have paper claims on top of that. But the whole idea of Bitcoin is to precisely eliminate the need to do that. So my question to you, and then we can go on, is what do you think Bitcoin's value proposition is? Is it that decentralization? Is it its predictable monetary policy? What resonates with you the most?
So I look at it at its stages, different stages. I think initially the early adopters, the first few years, look at the Satoshi's white paper. If you look at the ethos, this was a very strongly kind of libertarian slash kind of major stance using technology against the overreach and possible future overreach of government in creating a truly free and democratized system of exchange where it could, in a way, instill and preserve freedom. And there were, I think, the early stages of Bitcoin was very kind of ideologically focused, and the probability of it succeeding necessarily didn't have to be so high. It's just the values were so noble in a sense, right, that people were able to catch on. You have a second stage of type of let's say value prop, which I think didn't necessarily pan out, and that was kind of like the whole ecosystem around Bitcoin and cryptocurrencies. All of the startups, VCs coming in, saying this is a huge platform. This is the next internet, right? All these companies are going to be built on this crypto technology. Let's build, the internet, blockchain, and that type of stuff, lasted for a while. That was more an investment hypothesis in companies and a whole ecosystem that hasn't panned out as much as what I think VCs would have hoped for. There's another kind of a stage, and this stage has now become kind of this more protection from seizure of assets, right? So especially those in different countries that might have more unstable governments, they look at this, they go, hey, I can put money in real estate, but that could be seized in my country. Let's put some of my assets in this thing that the government can't touch, right?
Got it.
Right, that's a value proposition I think is actually one of the most legitimate value propositions to date, right? And the last kind of value proposition, which I think is perhaps the strongest right now over the past few years, is the value proposition of Bitcoin as an investment, right? So basically you buy into the coin because you think it's a great investment. You think it's going to appreciate in the future. But along with that whole Bitcoin as investment, you think, hey, number one, it's supposedly supposed to be scarce. They're not making any more of this, right? Everyone's getting into it. So there are lots of different, value propositions, here with Bitcoin, and they're kind of mixed. It's not just one value proposition, that's going on. Each player has, different, aspects of the appeal.
Great. So I'd love to deconstruct those four that you mentioned. So I think that the first and the third are actually very, very symbiotic, and if not pretty much the same thing, right? The first one you said was coming from libertarian ideals, this really sort of cypherpunk movement on figuring out ways to circumvent the surveillance of the government to preserve capital. The third one is exactly that, right? The protection of assets against arbitrary seizure, probably from governments, either indirectly or directly, indirectly through inflation, directly through the outright knocking on someone's door and telling them to give up their home. And then the second and fourth, I would say, is pretty much kind of the same as well, right? We saw kind of the advent of blockchain, not Bitcoin. We saw kind of the private blockchains in the corporations and figuring out ways to, audit supply chains and all this stuff that had momentum and then ultimately failed. And in that failure was the rise of, it might just be about Bitcoin as an investment. And the best play here is just to hold Bitcoin. So I completely agree with that assessment. I think it's a great recap of perhaps the evolution of Bitcoin. But I will say that your first and third point are, you mentioned your third point is the most legitimate point. And so if that's the case, I'd like to go back to your initial question of, why not just peg something to 24/7 exchange that's more efficient? Could you have met the first and the third with that option? I'm asking you that. Is it possible to have the protection against arbitrary asset seizure or some sort of financial system that acts independent of a traditional financial system with a centralized service that is issuing claims on a commodity that they are holding in reserves?
Yeah. So what I want to actually go into here is, so if you have Bitcoin actually not even considered a currency, like you can take this first and third type of argument of, protection of seizure of assets, etc. Like Bitcoin doesn't need to be a currency. It could just be a digital store of value, right? There doesn't need to be any monetary policy or currency. It just needs to be something that's safe, that's kept out of the reach, right, of government. So that's what I'm saying. What I'm saying is
I see. So I would define Bitcoin not so much. If you ask me one way to define Bitcoin, I would define it much more closer to a commodity than a currency. It's a digital bearer asset that is similar to a commodity. And the reason why Bitcoin is so valuable is because it's an asset that can be matched by equity and custodied without liability or counterparty risk. And that's the idea, is that you have, assets equals liabilities plus shareholders' equity. You have zero liability on the counter side of custodying your own asset, right? And that is the fundamental difference between something like Bitcoin and something like what you proposed. Now, there is a very interesting ongoing debate in the crypto community, in the Bitcoin community, on whether the commodity-based monies or store of values and sort of the medium of exchange / unit of account are inextricably linked, right? Where if you look at the evolution of money and Bitcoin evolving as a money over multiple decades, it starts as sort of this digital collectible that a few people who are enthusiasts about it are holding. They're not really using it as store value. It doesn't even have a market price. And then as more traction and network effects start to be built, it is being used as a store of value. And then that store of value then transitions to medium of exchange and then unit of account. As there are less disincentives to spend, as there's a market saturation of demand, it becomes quote unquote less volatile, and people have kind of more. They're more okay with spending their Bitcoin, quote unquote. Now, whether or not that's going to be the case, I think is independent of the value propositions that Bitcoin provides today and has provided and will provide. And yeah, and I agree. I'm willing to concede that that perhaps force fitting the model under a currency is counterproductive to the broader point of this just being a digital bearer asset that an individual can wholly own without any counterparty risk.
Yeah, I mean, like if you were to say Bitcoin is a digital asset,
Yeah.
right? Like that makes sense. You know,
Okay.
it's like yeah, totally.
Yeah.
But when you
Sure.
say Bitcoin as currency, Bitcoin monetary policy, Bitcoin as money, that's where I say I have to kind of interject a bit or jump in and say, wait a minute, Bitcoin perhaps could one day become a currency, but I mean, how is Bitcoin going to become like a true medium of exchange? Like, you know what I'm saying? Like, there's so many barriers. I mean, to Bitcoin and the inherent kind of inherent issues with Bitcoin being a medium of exchange, right? I mean, what's the deal with people's fascination with Bitcoin as money? When it's
Yeah.
like, I mean, I could see, yeah.
Well, that's a great that's a great question, and something that I would say prior to my interest in Bitcoin had no conception of what money was and how it was defined and who dictated it and what something was worth and why it was worth what it was worth. Um, but I'll say a few things. I'll say first off, I think that the questions that you're asking today are very reminiscent of the questions that people were asking, call it in 2011, when Bitcoin didn't even have a market price, right? Where it was just like, why would someone even put this on an exchange to sell? It's just this random thing that people are mining from their computers, and you need to know how to, set up a node and all this. And it's like, it's this really weird paradigm that if you're not exposed to, you won't fully understand. All that to say that I think that the jump from 0 to 1, which has already happened, is going to be, or is easier than that, or is, I'm sorry, is more difficult than that jump from like 1 to 100. And I would say 0 to 1 being, let's say, a recognized commodity or a store of value or some sort of protection against inflation, and 1 to 100 being sort of this global widespread currency or medium of exchange that people kind of transact on a daily basis. I think that the idea of, because you're saying why relate it to monetary policy and why relate it to money. If you look at the early kind of Bitcoin talk forums, where the early adopters, including Satoshi Nakamoto, how they were discussing this, they were discussing this as a new monetary system. You mentioned earlier that you think that this was just random. This monetary policy is something that was created, I think you said.
No, okay, let me clarify.
Yeah.
Like I totally understand the whole ethos, vision, and mission of Satoshi with, the medium, with Bitcoin's original purpose of being this, exchange system. I just think that has over time, people we've learned a lot over that.
Yep.
And that original vision has proved challenging, I want to say the least. And there were some inherent difficulties with scaling, Bitcoin as a medium of exchange. Like, for example, like a few years back in an interview, like Elon Musk was asked about Bitcoin, and he was like, yeah, I mean, he had some few points, but one of his points was he doesn't think it's going to be the database of money in the future, or the central database. Okay. And when you look at that kind of comment, what it's going down to is going down to the essence of what money is, like, or how it's recorded and transacted. And what Bitcoin is doing inherently is, because the value proposition, one of the major value propositions is security, to provide the level of security they do in a decentralized manner, they have to, the network has to spend so much energy consumption as proof of work that right. makes transactions very costly and expensive to do. And because of that, it's by nature an inefficient database because of it's trying to protect decentralization. Now, if you didn't care about decentralization, hypothetically, and you only cared about efficiency, right, and cost, there would be far greater and cheaper and more efficient ways to do a database. You just make it centralized. Like any centralized database
precisely.
Could wipe out Bitcoin in its efficiency, right? And
Yeah, just like, I mean, that's why I think the comparison between Bitcoin and Visa is very flawed.
Hmm.
Because Visa, yes, is much more efficient at facilitating transactions than the Bitcoin base layer. And that is by design because Visa is centralized, it has a centralized database. There are chargebacks, there's whatever, however you want to define that. But I do think, and I'll push back a little bit in saying that here's where I completely agree with you. There are clear trade offs between security, decentralization, and speed. You can't maximize all three. And anyone who's telling you that they can maximize all three is misleading you in very serious ways. Bitcoin's base layer has explicitly chosen security and decentralization over speed. And the initial conception of Bitcoin being that P2P electronic cash system, I agree, has not met 10 years later that initial conception. But just like in an emerging technology, the narratives and the evolution of those narratives change. With that being said, the way that I look at Bitcoin's base layer, and then we'll get into scaling, is as this very robust economic settlement layer that can handle max throughput that any existing centralized service, max economic throughput, not so much max quantity of transactions throughput, that any traditional centralized service can simply not compete with. You can send billions of dollars worth of Bitcoin in a matter of minutes, and depending on your risk appetite, likely hours. But let's just say if I was a more risk seeking, minutes around the world in a way that that no government, no centralized entity can stop, and in a way that is provably that has been provably transferred.
Hmm.
And so when you look at Bitcoin's base layer as that high value settlement layer, no one can compete. Now, to your point, that's not going to help you buy a cup of coffee. So the question then becomes, what sort of trade-offs do we need to make to have Bitcoin at a higher level compete as a medium of exchange? And I will agree with you, it's certainly not at the base layer. But just like the internet scaled via a layered architecture, and how you had specific protocols that were meant to do specific things, I envision a world where Bitcoin as a network is going to be very similar in its ability to scale.
Hmm.
The base layer should not be touched. It does a few things that to the human eye is very, very boring, but very, very important. And if I'm going to transact a cup of coffee, perhaps I don't need those same security guarantees that I might need if I'm settling amongst banks.
Hmm.
And so perhaps I'm willing to sacrifice a small security guarantee by building on top of the Bitcoin network through something, let's say like the Lightning Network, that allows for you to create bi-directional payment channels that doesn't have quite the security guarantees of Bitcoin, but you're putting much less collateral at risk that a $5 cup of coffee, if it weren't to go through, if it were to get hacked, is something you'd be willing to kind of afford to lose if it comes at 99% of the time being very convenient.
Hmm.
And so if we're talking from a scalability and infrastructure and tech play, I will say that Bitcoin can and will eventually support itself as a medium of exchange slash unit of account.
Okay.
You have to, and I'll finish by just saying you have to realize that this is not some sort of, and not you, I'm saying the metaphorical you has to realize that this is not some sort of, 5-year get rich quick scheme or 10-year. Like this is a multi-decadal, if not multiple century paradigm shift in how we define economic settlement, money, the transfer and storage of value. And I would consider this just to be at the beginning of what will take decades to develop. But I
Hmm.
ultimately think that we will have this non-sovereign global medium of exchange, and whether you want to define that as a currency or commodity today, is independent of that belief.
Hmm. Yeah, I mean, yeah, I completely get that. Actually, that leads me. I have a few more. There's
Sure.
a few other kind of challenges or risks that that will lead or segue into. But on this point of kind of the settlement layer that you brought up, I've been reading up on Bitcoin as a settlement layer, et cetera. I think there's definitely a lot of assumptions though placed in that. Like, even when you say, oh, Bitcoin can do it more efficiently than anything else out there, I think you're comparing it to maybe banks and the banking system and all this stuff. But if, for example, hypothetically, if the major central banks of the world had their own cryptocurrencies, for example, the US, crypto, China, Europe, etc., and they were able to, settle, between banks, between their own cryptos, and let's say hypothetically, even banks could settle through these national cryptos. In some ways, I would say on a fundamental, more like, level, that this would actually be more efficient, just because the problem with centralized services or centralized, even crypto or digital currency is you lose. In a way, it's oppressive. Right. I mean, and that's the whole essence of Bitcoin.
Exactly. Yeah. I think you're nailing it on the head. This is comparing it to central banks is a non-starter, regardless of efficiency.
Yeah, and that's what I'm saying and that's why that's why Bitcoin is so fascinating to me, because I resonate with a lot of the values, and I get it. Like if you picture a world where all these governments have their own digital cryptos, every financial transaction hypothetically has to go through a national digital crypto. Imagine the power of these governments that they have in the future, and imagine the threat to personal liberty and freedoms, right? I mean, we're talking about a very different world that we live in, right? And to date, Bitcoin and the crypto world is one of the only, I won't say one of the only, but one of the few major movements that has nailed this observation that, in a way, money controls more than money. The power of governments to control money allows them to control many other aspects in life. And as government gets more power to control money through technology, et cetera, the risks are even greater. And that gives more reason to want decentralization and to for people to desire decentralization, right? It's a fundamental like freedom issue, It's much.
You're selling me on Bitcoin. I might just go out to buy some Bitcoin now.
No, and that's what I'm saying.
I think you're absolutely right. I think that what's interesting is that you went on this journey starting with, what if a central bank issues their own currency and facilitates intersettlement between banks? That's more efficient than Bitcoin. But then you go on this rabbit hole and saying, well, that's not what Bitcoin is trying to provide. Yes, it's as efficient, just like Visa is more efficient. But that optionality for a single individual to settle amongst themselves, you can't go through a central bank digital currency to do that at will, right? And so you have to pose the hypothetical of, instead of banks, imagine you and me, and imagine you were in a sanctioned country, and you were a family member of mine, and I had to send you some Bitcoin. There's no way for me to go through the central bank, or there's no way for me to go through a centralized service. And so at the very least, Bitcoin providing that optionality is, if you're trying to be convinced of the long-term value, is the only thing you need to hold on to.
Yeah, no,
I think that alone is enough of a value proposition to kind of see why people are so excited about it.
Yeah, no, I mean, I get it, because it's in a way like people maybe argue the extent or how, let's say, pervasive or strong the Bitcoin network will be in the future, but to have a way to transact and to settle outside of what's coming in the future with more centralized, more in a way oppressive financial systems, that in a way is a lot of freedom outside of that system. And the way I look at it is the highest probability is that happens outside of the developed nations, in a way, outside of the first world, meaning it becomes kind of like this, third world, like settlement transaction layer, which almost is like this sci-fi movie where you have like this first world controlled by, these strong,
You nailed it.
Yeah. Government, national cryptocurrencies oppressing and controlling, right, people through the monetary means. But then you have almost this alternative society that Bitcoin is almost like gluing together. And it's kind of out of this world, but I look at that as perhaps one of the more likely scenarios that's going to happen. What are your thoughts?
I have nothing to say to that. I love it. I completely agree. I think that the idea of Bitcoin being a grassroots, bottom up movement that might end up just being a parallel economy starting in developing markets is exactly kind of what we're starting to see. We are fortunate to be living in a developed nation where we don't necessarily need to question what money is. And yet, we see what has happened and what could happen, and we're starting to project that perhaps there is a call option in Bitcoin that I might want to have for future generations. On the other side, there's clear, real, immediate use cases in these emerging markets where if you ask 9 out of 10 people in Venezuela what they would want, they would say the US dollar any other day. I think that there's a common misconception of, oh, a Venezuelan is going to love Bitcoin over the US dollar. That's not at all the case. Having said that, Bitcoin provides kind of an opt-out system that the US dollar might not provide, given the strict capital controls in Venezuela, given kind of the KYC and AML that a single Venezuelan might need to go through and might not be able to do where they can get exposure to USD. So to your point, the beauty of Bitcoin is that it exists outside of the legacy financial system. It exists outside of the purview. And that is why many investors consider it to be uncorrelated. It will operate whether or not the central bank of the U.S., the Fed, decides that whatever the Fed decides, whatever any central bank or monetary authority decides, Bitcoin will continue to create a block every 10 minutes and compensate miners for helping create that block. And that, as an idea in a world that, to your point, is increasingly becoming centralized, we're seeing max surveillance, we're seeing, max, I would argue, kind of the slow removal of some basic liberties. Bitcoin is a representation or symbol of that. And if you look at, you were talking about this being a libertarian movement or a cypherpunk movement. A lot of Austrian economists are really they see Bitcoin and it resonates with them tremendously. And it was the idea of a famous Austrian economist, Friedrich Hayek, who is basically saying that we will never have a legitimate currency or money unless it is taken out of the hands of the government. But the only way to take it out of the hands of the government is we need to figure out this sly roundabout way, right? Bitcoin is that sly roundabout way. It started as literally nothing. It was born on the internet. It was no real founder or single point of failure that an individual could point to. And there was genuine interest that was born out of passion more than anything. The early adopters of Bitcoin were not looking to make a quick buck. They were looking to figure out ways to, maximize our freedom. And what better way than to start with the preservation of wealth? So I think that this, as just symbolism, is what makes me, personally excited about Bitcoin. And I think your point about this will likely emerge in emerging markets is it hits the nail on the head.
Mm-hmm.
Yeah.
Yeah. This leads me to this kind of my next kind of big skepticism or doubt of Bitcoin. And it's that people continuously say that Bitcoin is unbannable, right? The government can't ban Bitcoin. And sometimes I feel like most people don't understand Bitcoin in the sense that they don't understand how threatening Bitcoin can become if it becomes very dominant. Like they don't like there's something very profound about the role of money and government, where it's I think people kind of have this rosy kind of glasses optimism that, oh yeah, Bitcoin can grow into this huge thing and the government will love it and use it themselves, etc. But when I look at it, it's like there's an immense amount of power that the government accrues from controlling money and printing money, and collecting taxes, etc. And for Bitcoin to come along and to kind of threaten the ability for governments to control their own monetary policy, to print money, to collect taxes, etc., this is actually something that goes into their existential type of risk, where without controlling money, it's like you lose a lot of power in your country. And I think there's a trend where governments are, look over the past 20, 30 years as technology pervades, grows, governments are using those technologies, becoming in a way even more dominant, or let's say with surveillance and all this stuff. And I think, in my opinion, like people who think that the government can't, I grant the fact that the government, one government or group of governments can't end Bitcoin completely, right? Because it'll be in the fringe, right? It still lives.
Right.
But
Yep.
in a developed country, let's take the U.S., Europe, China, other places, a government, if you look historically, governments, if they really want to do it, they can do it. Like people in the Bitcoin community say, oh no, government banned alcohol, they banned gold, whatever in the past. But that argument is weak in my opinion, because the government didn't really go after it. Wasn't the highest priority existential risk to get to jail and to execute everyone who is in possession of alcohol, right? That just wasn't the case. There's different levels of what's illegal and legal, meaning with Bitcoin, if it gets large enough, it really gets to the point of it being an existential risk. And I could see major governments, and this isn't something I think that happens in the next 5 years. I think this is more longer term. But I could see certain governments crack down, make it first illegal to hold, legal to transact. I could potentially see a requirement to report net assets on income taxes, and huge fines and punishments by hiding that stuff. And even, just the on-ramp and off-ramps, and the whole US financial system, extending globally nowadays with all the requirements and relationships with FATCA and all these other arguments or things. And so what I'm saying is that this idealism that Bitcoin is this indestructible thing that no government can even push out of their borders, I think that's a little bit ideal. I think governments, if they're motivating enough, if it's as existential of a risk as I think it could become if it's large enough, governments can do a very good job at cracking down the stuff. It just pushes it to the fringe. It just pushes it out of those countries, and it could be robust, kind of a counter, network or financial system to more of the first world developed countries. But I do think there's some risk of it being, forced out in some ways. What are your thoughts?
Sure. So I first want to start by saying that the very fact that we're acknowledging Bitcoin as an existential risk to monetary authorities is a big, big step and a big jump from where we were, I would even say 2 or 3 years ago. So if you look at the evolution, where Bitcoin was and where Bitcoin's come, and the shift in narratives from it being a nerd money or money for terrorists and drug lords or some sort of way for VCs to pump and dump, to now we're on a platform discussing the existential threat that it poses to monetary authorities. In my book, that's already a win. So that I'll start by saying that. But I'll push back on a few points. I'll say the first point that you said about a lot of Bitcoiners like to talk about banning alcohol or banning gold. I would say that banning alcohol, perhaps that's not the right analogy. I would say banning ownership of gold, which was the de facto monetary asset of the world for nearly 45 years, is a testament to the fact that, yes, banning Bitcoin is certainly a possibility, and they have banned gold in the past. So I'll preface this entire response by saying that I, for one, I'm not going to push back on the government's attempt to ban Bitcoin. In fact, some already have. I mean, India has been very, very tight. China has done its fair share of figuring out ways to control Bitcoin. And so my assumption is that you're probably talking about the U.S. specifically in banning Bitcoin, or perhaps kind of major hegemonies So if you look at the banning of gold and how that was how the U.S. banned gold, it was considered a matter of national security to prevent hoarding, and they forced people to be put into assets that weren't gold. And I would argue that, and Lynn Alden, who's a macro investor, makes a very interesting case on this point, where it was very obvious why the U.S. would want to ban gold back then, much more so than why they want to ban Bitcoin now, because they actually had an incentive to ban it because they were backed by gold. And so they didn't want to have others hold something that they were backed on. And so naturally, you have this tendency to centralize reserves, and you want to have complete control over your monetary policy. And so you're going to ban the ownership of gold. And so that's that. I would argue that today, and I know you're talking about 10, 20 years down the line, but I would argue today there's much less of an incentive to ban Bitcoin than there was to ban gold in the 1930s all the way to the 1970s. And so that's the first point. I'd say the second point is that you're assuming that Bitcoin grows, right? And Bitcoin becomes, you say, past $1 trillion or whatever it is, right? But baked into that assumption is widespread adoption from major stakeholders who might have an interest in the political realm not to ban Bitcoin, right? So if you can't like look at Bitcoin being a $10 trillion market cap in isolation without thinking that if it's going to be that $10 trillion market cap, there's going to be massive institutional momentum, strong lobbyists, and almost a default in the common kind of population that Bitcoin is here to stay. I would say that it would actually have been much easier to ban Bitcoin earlier on than it would be today. I mean, if you think about the institutional traction that we've just seen, and I'm going to ask you a counter question on what the hypothetical would look like. But if you look at anything from the two publicly traded companies, MicroStrategy, if you're familiar with ARK, Square, which is a high conviction name for us, deciding to invest Bitcoin. You look at major institutional investors. You look at some senators now that are proponents of Bitcoin. There's a case to be made where there's going to be a strong political donor class that's going to be holding Bitcoin. I argue that major nation state politicians are probably just waiting for people to say Bitcoin is okay to disclose that they've been holding Bitcoin. It's just that there seems to be this paradox between Bitcoin gaining enough momentum to be interesting enough to ban, and it being effectively impossible to ban because of all the momentum that it's gained. So what, you're going to shut down Square and MicroStrategy and PayPal and Coinbase and every major institutional investor who's giving you millions of dollars donations but now has a Bitcoin position? You're going to tell them to sell their Bitcoin? So you look at the IRS today, there are specific guidelines of Bitcoin being kind of taxed as property. You have Senator Mnuchin, or I'm sorry, I don't know what he is, Secretary Mnuchin, I think, yeah, Secretary Mnuchin, who's talking about Bitcoin and saying, it's an investment, it's a speculative bubble. I think by the time people realize that it's more than a speculative bubble, there will have been enough interested third parties where it becomes very, very difficult to ban Bitcoin. Mm-hmm. And then finally, if you look at the way in which the enforcement of that gold ban ownership was, on paper, there were very, very, very severe penalties for owning gold. And it was like you would literally go to jail if you owned gold. But in practice, enforcing those penalties was prohibitively expensive and, in fact, just inefficient. There were more important things that people needed to worry about. So even the enforcement there is going to be difficult, especially because the paradigm of ownership in Bitcoin is 100x more effective than the ownership of gold, in that nothing but cryptography enforces ownership in Bitcoin. And yes, you can have a legal framework in which a single, nation state might say you cannot hold Bitcoin, but it is unconfiscatable in nature. And so, yes, you can have someone come to your door and have a gun to your head and say, "Give me your private keys." And yeah, Bitcoin is not torture resistant, but as a concept of the fact that only private keys, the possession of those private keys, is what dictates ownership, it becomes very, very difficult to enforce kind of the banning of that ownership.
Mhm.
And then I know Pomp mentioned this one as well, which I think is a very valid point on the nation state game theory going on, where for every country that's going to ban Bitcoin, you will have another country that will promote it and advocate for it. So that's I would say my take. But if Bitcoin were to fully realize its potential, like full like $80 trillion market cap of this single native currency, then absolutely this would shrink the state, and pose a severe threat to monetary authorities and the government's monopoly on money issuance. I personally don't think that Bitcoin needs to go there to be considered fully successful. I mean, if you just think about, okay, you ban gold. If Bitcoin is just gold, I mean, that's a $250,000 Bitcoin price. And that, for me, in my book at least, is a win. So, it's really dependent on where you're viewing this,
Mhm.
or how you're.
All right. Yeah, that's some cool thoughts. So I want to actually unpack some of this stuff here. So
Sure.
I think first off, with the whole concept of, there's going to be Bitcoin supporters in the governments, et cetera, institutions, like there's a lot of assumptions going on with that. In my opinion, like if there is a, ban on Bitcoin in certain nation states, it's just, I mean, it's how you roll it out. One thing is because we are increasingly living in a digital society, and because Bitcoin is a digital asset, this is a completely different game than banning gold. Gold you could hide under your pillow, etc., under your bed. With a digital asset, sure, you can hide the private key, but we also live in a different world where, let's say, if the government requires reporting of net assets, and there's great punishment without that, and they require reporting of all your, digital cryptocurrencies as well. It's like we live in a world that's completely different. 100 years ago, the government couldn't do as much as they can right now. It's a supercharged, super power. The government is super powered compared to 100 years ago in the abilities that they have to track finances and assets, etc. And they could require more in the future, which could make enforcing a ban on Bitcoin completely different than enforcing a ban on like gold, like a physical asset, right? The second thing is, with having these supporters in the government and institutions, like in my opinion, a few things. One, institutions, like they're very straightforward. It's like whatever makes them money. If they see Bitcoin going down and government cracking down, all this stuff, there are I don't think many of these institutions buying into Bitcoin really are ideological, like Bitcoin idealists in a sense. A lot of, in my opinion, certain institutions that are the big money. Sure, I think Jack Dorsey and Michael Sawyer and some others will be more ideological, but in terms of like the vast majority of money, they're not ideological. They're looking for money. They'll sell when they, very easily, as well as most individuals. The other thing is, with the government, like we saw this with Facebook, Libra. It's like, once the government officials start to understand, like, wait, what is this doing? Like, then it's like all these red flags come up and say, wait a minute, you've got to change this whole thing,
Yeah.
And that's the whole thing. How many people really understand Bitcoin, in the
Exactly,
government?
but that's I guess that's the point. The point is that it'll have been too late before they realize it.
Uh,
Like the fact that they've cracked down on Libra is an exact testament to that. Like, oh, there was a single choke that you could a single neck that you could choke in Mark Zuckerberg and Facebook, and this is a threat to our monetary system. Meanwhile, Bitcoin is slowly but surely, working as designed, and there is no single throat to choke. And so, like that's part of why Bitcoin, it has been, and I believe will be successful, is because it's just seeps into the minds of the population until it's overwhelmingly there, and then you're like, oh wait, now what? So either you go and say, okay, let's double down, let's start mining Bitcoin, let's become let's hold it in our reserves, let's figure out ways to kind of theorize around overpowering other nation states who have already started to mine Bitcoin. That's really like the idea, is that if hypothetically the U.S. were to ban Bitcoin, I would argue that you'd have probably China, Iran, Russia, North Korea all saying we love Bitcoin,
Yeah.
and so like it's not in their best interest to ban Bitcoin, especially if it's sold as, which it's increasingly being sold as a technological innovation that can spur economic output and productivity much more effectively than what might be realized today. I just don't see that happening. Honestly, I
Okay. So
really don't. I think
there's a few points here. First off, like, and first I want to say, like, I love this discussion back and forth. It's just like great, chatting about this stuff. I have a hard time finding people who could just like dive into this on a deeper level. But a few things, like, there's some assumptions going on there. Like first is like, oh, Bitcoin will lead to productivity, right? Technological advance, etc. Like, I think that's like, that's questionable in the sense that, if there is true digital transactions and true digital economy, in a sense, yes, it increases productivity immensely. But that's not to preclude a separate digital transaction system coming out, of a centralized ledger. It could be from a company or a government that could increase productivity in the future too. The other thing is, when you talk about, let's say, these other governments, saying, oh, if the US bans it, then we'll, accept it. A lot of these governments, I mean, it's like, the more totalitarian in nature, like the government is, I think in some ways, like, Bitcoin doesn't match that, because Bitcoin is against that. I mean, the whole ethos, right?
Yeah, that's a good point.
Yeah.
And
So
not
like,
until they reveal that they have Bitcoin on their balance sheets that they've been accumulating, right?
well,
That's the thing.
even
It's like,
that, like, the whole point of these governments, whether it's totalitarian, even like democratic states, most government officials are there to preserve their position and preserve the government itself, and that requires, in a sense, and this is like kind of like a little bit of a dark view of government, but it requires the government in charge. That's the therefore it's the preserving the control of the power of the government. That's the aim. And I think that's when, if there's a shift that happens, like, in my opinion, Facebook Libra got its flack because of Facebook, not because of Libra. It's because Facebook is a dominant player, globally as well. And once Bitcoin gets to a certain place, and whether that's $1 trillion or $10 trillion or $80 trillion market cap, I'm not sure. But I could see a point where, it's interrogated, it's put on the spot, and there is a lot of fear with certain government officials that shift the environment. And that's the other thing, the rebellious nature of Bitcoin, the ideological nature, the noble values of Bitcoin, it's not shared by necessarily the majority, especially in politics.
Right. No,
or
I
government.
agree.
It's a very fringe,
I totally
thing.
agree. So what's your view on, like, India banning Bitcoin or attempting to ban Bitcoin? What's your view on China attempting to ban cryptocurrency exchanges or mining?
Yeah. So
Has that, why isn't that why hasn't that done anything to the momentum that we've seen?
Well, okay. So a few things.
And how effective has that ban been?
So a few things. One is, there's a level of, for example, urgency that a government will crack down on something, right? Right. To me, I still think Bitcoin is early in innings, right? And that's why I don't consider myself a Bitcoin bear by any means, because I'm talking about, like, what's going to happen if this really, takes off, far greater than we realize. Like, I see that, I understand what's going on at that.
Yeah.
And so in some ways, I still think it's in the early innings. What these countries are doing is not as serious, obviously, as it could be when Bitcoin's market cap is 10 or 20 or 100 times, perhaps, That said, with, like, for example, take India, for example, like, there's some interesting phenomenon going on, which also poke some holes in this whole Bitcoin as a third world type of monetary infrastructure system, is that a lot of these countries, in my opinion, they're realizing more and more that that money is crucial. And they want to control money, but also, they want to maximize tax revenue as well. And all of that is going to preserve, right, their government, make it stronger. And so in the case of India and some other countries, like, you have this whole, demonetization policy where India will say, hey, let's pull back, take all of our,
Yeah.
all of our printed money back, and we'll
Yeah.
reissue the money. But suspiciously, it's like not nearly as much as what it was before, right? And they'll
Yeah.
say like, hey, you should try doing digital currency as well.
Mhm.
And then they'll crack down on some other stuff. And the bigger movement or trend, in my opinion, is the government exercising greater authority, greater involvement, greater overreach in the area of monetary policy, in money, right? And it's the way, like, it's not just like, that's the thing. Some people think, oh, it's just printing money, right? Government's just printing money and borrowing money, and that's the extent of it. No, this is far greater. The government's role in money is far greater than that. That's just might be the
Yeah.
surface level. I mean, it's like the whole notion that, for example, a government can get rid of cash, let's say go cashless, and then, for example, track transactions, right? Understand who's transacting what, have a tax on every single transaction, whether it's a small tax or large tax. And, it could be even, it doesn't even have to be income tax, it could be even transaction tax. But for the government to push the envelopes of what's possible. This is existential for the government. If the government doesn't have enough tax revenue to cover debt and their obligations, this is basically going to be the end of that government. And so the government needs to maximize revenue, and they do so by exercising more and more control over financial transactions, making it more transparent, making it more taxable, and increasing their revenue. Like, this is the trend, not just in the first world though. This is happening in places like India too, and that's where that's where Bitcoin comes in, and it doesn't match what the government's doing. It's like the government says, "Hey, I don't like you, Bitcoin. You're not playing the game that we're doing," and Bitcoin isn't large enough where they're gonna like completely go crazy on Bitcoin yet, right? But I'm just saying, like, this is major battle in the future.
Yes. I think that you bring up a lot of really, really good points. So on the tax revenue point, what you're sort of extrapolating or alluding to is Bitcoin has to like be big enough to be like this black hole of asset retention, where it becomes let's just assume. I mean, first of all, you pay taxes on your Bitcoin today, and it's taxed, and there is a tax policy. And your point of like, oh, you have to report net assets. Okay, let's assume that you report net assets. So let's assume that there is no tax policy on Bitcoin. Let's assume for now that like you can't tax on Bitcoin, and anyone that's going into Bitcoin will be able to evade taxes, right? Then you're effectively assuming that it becomes a clear existential threat to overall tax revenue in Bitcoin being the only asset that can't be taxable. So it means that Bitcoin as an asset needs to take a huge share of total assets available to actually make a dent on tax revenues. And what is that number? Is that like, what is that, 50 trillion? What is that? Like, I mean, the equities or bonds, they're like, 80 trillion? Real estate is like 200 trillion. At what point is it where tax revenue actually becomes like where it becomes a problem?
Well, on that point, I look at it as more like a graph here. So you have this whole thing of Bitcoin rising, kind of it's becoming a threat, and let's say the market cap and adoption increases, right? But there's another axis here, which is basically the government's more internal motivation to have more power over transactions and taxes. So this actually increases, I would say, naturally over time with more and more technology that's available to the government, making it cheaper and easier to exert that power over people, right? So you don't even have to do anything, and the government gets more motivated, right? And Bitcoin can stay the same, but if the government's motivation to track, right, to get more transparency increases, then that could also lead to that scenario.
Yeah, that's a good point. My second point is, and I'd like to really commend you, Dave, for the level of thought that you've put into Bitcoin and the healthy skepticism that you've presented to kind of the general kind of Bitcoin enthusiasts and advocates. But I don't think we really disagree anywhere in what we're saying. And I know you say, I disagree on a few points. And effectively, what
Bitcoin camp is saying is this at its full potential could be a threat and will be a threat to the monopoly of money issuance that governments currently possess. And if the government cannot have a monopoly on money issuance, then by definition, it will be less relevant than it is today, period. Now, whether or not Bitcoin is going to be able to reach that potential in the infrastructure and the network effects and the recognizability that it's built is an open question that we constantly debate within and without and out of the community. So it's really like, we're saying the same thing. I happen to believe that Bitcoin, like, I don't disagree with you that Bitcoin is a potential threat at its full potential. I will say that Bitcoin can succeed without being a threat. And I give the example of gold. I think a $500,000 Bitcoin is a successful Bitcoin. But I will say that if it were to reach its full potential, it'll have been pretty much too late to have enforced that to have enforced some sort of ban on it. And I think that eventually we are going to see bans and we're going to continue to see crackdowns, but it's going to be a constant back and forth of we're going to ban it and then we're not going to ban it. And then we're going to try to figure out ways to tax it heavily and then we're not going to tax it heavily. So it's like, but at the same time, Bitcoin is operating the way it's operated and will continue to operate the way that it's operating. So I happen to be in the camp where I think that there's going to be enough momentum where it's going to be very difficult to ban. And you happen to be in the camp where you just don't see a scenario in which the government won't be able to crack down with the increased surveillance that they have, with the ability to track, everything digitally, anything from, you go to Passport and you're at the border and you're going to have, okay, this guy owns Bitcoin. So did you bring your Trezor wallet with you? Or did we have this? Did we have that? Like, that could be a scenario. Only time will tell. But what I can say is, as a Bitcoin enthusiast, I think that this is the most likely attempt that we have at building a non-state money, or the most promising attempt.
Sure. I would expand it, and it's not just the money. It's actually, in a way, like I get it, because money is just part of it. If the government has total control of money in every aspect, like people don't understand what type of control that really is.
Right.
It's very profound, and I don't think people understand the grasp of. They don't grasp the power of technology that is enabling governments to have more and more power. But if you give ultimate 100% control of money to control of that power to the government, it's like really it's connected to all freedom, and
Precisely.
And that's why in some ways, like, people, I think, underestimate the profound nature of Bitcoin as hope, as this alternative type of hope to a potentially very dark, future. And I think a lot of times people get caught up in, Bitcoin is going to skyrocket, right? And going to the moon it's like a stock price for most people, right?
Right.
It's like, hey, what's Bitcoin's price today, right? It's going to go up higher.
The only difference is it's 24/7, so you're never taking a break.
Exactly. Yeah. It's 24/7. It's like you wake up in the middle of the night. What's the price of Bitcoin? Yeah. You don't know what's going on. But I think what fascinates me is less so the volatility of the stock, right? And less so the price of it now or in 2 years or 3 years. This has profound implications on our future, on almost all aspects of our life. And the point I'm making is, like, it appears if we really get to the crux of Bitcoin, which we seem to have some resonation on, it's like the greater Bitcoin success, in some ways, it does pose increased risk in some ways too. Right? That's the nature. That's the rebellious nature, the threatening nature of Bitcoin in and of itself,
Yeah.
And we might disagree on what those risks, how big those risks are, right? And if they can be overcome or not. But I think, just the nature of Bitcoin being very threatening, being a decentralized, right, asset and potentially system, is it's mind blowing in that sense to me.
Sure. I mean, I would tell you, I much prefer, I love conversations like this with the level of skepticism that you have about, is Bitcoin going to survive as a potential threat to monetary systems than like, Bitcoin is some sort of Ponzi scheme that no one really cares about. And so I think if we can, at least acknowledge our the starting ground, and that's something that I think should be, appreciated. And I do want to address one interesting point that you had, where it's like you were kind of alluding to, it's more than just money. It's kind of like freedom, right, or liberties, and it's that representation. It's symbolic of what could be. A lot of people like to use the mental model of Bitcoin being the separation of money and state. I sort of extend that, and several have that I agree with. It's the separation of property rights in state, where property rights kind of are a fundamental default to prosperity. And the enforcement of those property rights has always been top down, based on the reliability of a local jurisdiction. What Bitcoin really is providing is a new form of independent property rights that happens to be a commodity-based money, in which you can really think of it more as like a digital real estate, right? Where the only difference is that you have full possession of a share of the pie. That pie, no one tells you but that private key that you own that pie, and no one can grow that pie without your permission. And so this is very, very profound. No other asset in history has needed to rely so little on the government to enforce ownership.
Yeah.
And that as a concept, to your point, is very powerful.
Yeah. I mean, like, yeah, I mean, this stuff is like, this stuff is, in my opinion, getting to the essence, the heart of what's really going on. And I think it goes even like a step further in terms of its kind of almost philosophical / I don't know what to call it. It's on a different level, where if you look throughout history, it's like when people have gathered together in towns, cities, etc., formed governments, etc., they've given governments certain authorities. And over time, as the governments have gained more access to the ability and the technology to oversee and manage more things, people have, in a sense, been giving more and more power to these governments. So these governments, in a way, have become this ultimate authority on earth. Now this actually kind of transverses a bit into a bit of a theological discussion too, which I'm going to not go into right now, but it's like, who is the ultimate authority on earth? But I'm just saying, if we look at what we know on earth and humans, it's like people have put government as kind of that ultimate authority, and they can decide the rules. They can even take a person's life. They could seize your property. They can give you property. They can take ownership of any company in their country. If the US government wanted to say, hey, we want 95% ownership of Google, they could just do that. It's like people, I think, they're not in touch with exactly how much power the government has, because they haven't completely exercised all that power. But that's the authority that humans have been giving to these government structures. Now, what Bitcoin is trying to do in its like essence or core is, we're not even trying to do, but it's just its identity in a way. It's taking that authority away from the government into this decentralized system, where it's no longer a centralized, like, human-made system, where government's on top. And that's the profound, I think, nature of Bitcoin, far more profound than so-called the scarcity argument or some other arguments that are going on. It's this argument that, hey, it's a completely different authoritarian structure, which doesn't even have that authority that we typically know of. It's decentralized, using technology and cryptography to create that. Fascinating stuff.
I do not want to add anything to that. That was perfect. That's it. You get it. You get it. And I hope your viewers will enjoy that tidbit. I mean, if anything, if there's one takeaway from all of this, it's exactly what you said. I mean, it's not so much the scarcity. It's not so much, the price action. It's really a representation of a new form of institution that acts outside the purview of legacy systems, of which the most powerful legacy system being the government. And that's really what it comes down to.
Yeah, and the most long-lasting, authoritarian system.
Yes.
Yes, yes.
I'll say what's funny is like you're like the government can take, and I was thinking in my head that you're like the government can take 95% of Google if they wanted to. Well, the government cannot, even if they wanted to, take 95% of Bitcoin supply. They just can't. It is impossible. And that's kind of that's the point that Bitcoin is trying to solve. So
yeah. Okay. I want to transition to one more challenge or risk here, and not to burst our Bitcoin enthusiasm here, but there seems to be some inherent investment risks with Bitcoin, largely because the value of Bitcoin is so kind of intangible in some ways. There is that value that, for example, the network provides in securing that current kind of value in the network, right? But a large part of that value that people ascribe to Bitcoin is more based upon its future prospects, right? What Bitcoin is going to look like 5 years from now or 10 years from now, kind of the growing momentum of Bitcoin and adoption, et cetera. And I think because of it, when you look at, for example, investing in a growth company, an early stage growth company that doesn't have, let's say, much revenue, everything's based upon the future prospects of this company, it's going to be a very volatile stock, a very volatile company, because the mood and sentiment and different facts and situations will change the outlook of this company 5 or 10 years down the road. It's very hard to have visibility. In the same way, it's like Bitcoin's future is unknown in the sense of we don't know what trajectory and where it's going to be in 5 or 10 years in terms of adoption and demand and value, et cetera. I think because of that, it's inherently risky as an investment, right? But then on top of that, there's a second kind of inherent risk to this. With a growth company, I can track the revenues of this company over time if it's growing. And there is some type of thing where eventually this company's value should be the future dividends of this company discounted to the current day. And in that sense, even when I'm investing in a growth company, there is that risk of this company, demand for this company stock can collapse and this company stock can go very low. But even with that risk, if the company still does well, like for example, take Tesla, the stock goes down, it crashes, people hate the company, they think it's going bankrupt, let's say 2012 or something. I have additional confidence in that company at that time because I believe in the future cash flows. Like I think this business is going to do very well, even if the sentiment and demand for this stock is very low and people hate it. So I have two type of investment theses for this company, and I don't have to be right on both. I could be right on the long-term kind of business dividend value of the company. With Bitcoin, it only seems to have this one track, or largely this one track of demand, meaning Bitcoin needs to maintain demand for its product in order to increase in value. You don't have this thing of they're making new cars, 1 million new cars every year that they sell and they get revenue and then they pass back that dividend to people. So inherently, I think Bitcoin is a more risky investment than even a growth company when you look at it just based upon like the essence, the first principles of how we're investing, in these assets. I'm not saying Bitcoin is a bad investment. I'm just saying inherently, because it doesn't have the future dividends discounted to today, it's more based upon the current demand for Bitcoin, for how much people believe in it today. And as much as we can say that that's not going to change, if that does change and the whole sentiment, everything just collapses around Bitcoin, and there could be different scenarios, maybe there's, but I'm just saying if that happens, Bitcoin can collapse and, it's not a guaranteed, it's not like as guaranteed as some people might like claim it to be. And I want to hear your thoughts on that.
Sure. I think that this is a very interesting framework that you've presented that I think is also a misunderstanding, partially of why investors are so hesitant to get in. And being at ARK, which we're mostly focused in the public equity space, the analogy that you bring to Tesla or high growth stocks is often the analogy that's tied into Bitcoin, right? It's like, how do you value Bitcoin like you can value a stock? And the idea, and the simple answer is you can't and you shouldn't. And in the framework by which you can understand Bitcoin's value should not at all be driven by analogies to understanding the equity space. So I want to kind of deconstruct some of the points that you made that I don't disagree with actually anything that you said. It's just I will caveat some of the things that you said.
Yeah. Well, to qualify that, I'm saying I'm actually agreeing with you that you can't use equity analysis because there is no cash flow or exactly. Yeah. And okay, go ahead.
So right. So there is no cash flows in Bitcoin. And so you can't figure out a way to have some sort of reconciliation to a balance sheet like you can have on Tesla and justify whether at any given point Bitcoin is overvalued or undervalued. So I'll have two parts to this answer. The first part is kind of what is intrinsic value, or how is value driven, which you sort of alluded to at the beginning. And then the second part is just because there is no discounted cash flow that you can make on Bitcoin doesn't mean that you can manage it as an investment as effectively as you can manage an equity. And that the risk, it's not necessarily riskier than a high growth stock. It is just much different in its value accrual behavior. And that's really what it comes down to. So where I agree with you is demand. Its value is exclusively, and you're like partially, I say exclusively driven by demand relative to supply. That is the only thing that's going to drive Bitcoin's value. And it is, the willingness to hold that asset. Now, there are people who argue that Bitcoin has no intrinsic value. I'd argue that the very concept of intrinsic value is relatively limited, especially in this context. Rather, what Bitcoin has are intrinsic properties that might render utility and therefore value. And in the case of Bitcoin, like you mentioned, Bitcoin's utility is that it allows people to store outside of the currency system. And we spent the last hour discussing Bitcoin's value proposition. That is something that you can really only get in Bitcoin. So for that reason, there is a clear demand driver for why you'd want to hold Bitcoin, right? Now, the second point is, okay, the volatility. I do want to address the point of volatility, because naturally, if the only demand lever for Bitcoin, or the only value lever for Bitcoin, is volatility, then people get out of the asset, it's going to crash, and people get into the asset, it's going to appreciate, and that's it. It's not like, again, you can't reconcile it to some sort of fundamental productive cash flow. But the volatility is really just an emergent property of Bitcoin. And I want to address this, and I want to tie it back to your point of monetary policy is like Bitcoin has this monetary policy around scarcity or strict or kind of this logarithmic supply. Really, Bitcoin's volatility actually highlights the credibility of its monetary policy and its ability to have demand be that sole value driver. So there's a common mental model in macroeconomic policy that a lot of Bitcoiners have brought up in the past. It's called the macroeconomic impossible trinity, right? It's this impossible trilemma that monetary authorities implement in dictating their monetary policy, where you have a triangle, and each vertex of that, or edge of that triangle, has a specific policy decision that can be made, but only 2 of 3 policy decisions can be chosen. Very similar to the trade-offs of decentralization, speed, and security, where you can really only choose 2. In this case, you can really only choose 2 of the 3, and that is fixed exchange rate, free capital movement, and independent monetary policy. So you can't have an independent monetary policy and a fixed exchange rate, but not limit the capital controls in that monetary policy. You can't have a fixed exchange rate and free capital movement like what you had with the gold standard and have an independent monetary policy. So I want to just debunk that Bitcoin is volatile and therefore unusable by saying that Bitcoin is volatile because it has explicitly chosen free capital movement and an independent monetary policy and foregone that fixed exchange rate. And by foregoing that fixed exchange rate, then you have massive fluctuations in the price. And so does that mean that that Bitcoin can't be valued as an investment, or it's riskier as an investment? I would say the riskiness comes from just the relative nascency of the investment, right? It's just that it's a 10-year, I wouldn't say it's a stock that's been around for 10 years. It's a 10-year asset, right? If you look at gold, that's a multi-thousand-year asset. So the risk comes in just the relative immaturity of the asset. With that being said, with the birth of a new asset class comes the birth of new valuation tools and metrics to deconstruct not necessarily a balance sheet to create a discounted cash flow model, but in this case, if you agree that demand is the only driver for value, then to deconstruct buyer and seller behavior and to really break down raw supply and demand of the network. And thanks to the transparency of that network, you are able to, as an investor, see different patterns of holding behavior emerge, which might help you dictate whether something is overvalued or undervalued at any given time. There is something called the blockchain, which people like to use as this buzzword, but that actually has a lot of value within the Bitcoin network that allows for you to think of it as like this 24/7 transparent global balance sheet that, in addition to being able to verify transactions and supply, also allows for you to determine what sellers and buyers are thinking at any given moment, given their decision to transact Bitcoin. Transactions being a proxy for selling and holding Bitcoin being a proxy for, increased demand. And so, this is actually some of the research that I'm working on that I'm really excited about that we're going to publish very soon. But it talks about how really to date, most valuation analysis in crypto has been force-fitting traditional asset valuation frameworks. And that's where something like, a high growth tech stock is going to be volatile, but at least, I know that it has a balance sheet and a team and some sort of fundamental intrinsic value. That's where it's hard to make the jump of, okay, let's not even think about that when it comes to Bitcoin. Mm-hmm. And so, the analogy that you can really give is like Bitcoin has this transparent balance sheet. It's a 24/7 ledger in which I am able to determine the investor cost basis of Bitcoin. I'm able to determine how long people are holding this asset. And I'm able to determine what cohort of asset holders affected certain price movements, right? For example, the COVID meltdown, where we saw the largest drawdown in price history, or the second largest in price history in March, Bitcoin drew down 50% in a single year. That is a corroboration to your exact concern. You don't know if something's going to happen where people are going to pull away their money. And in the case that they do, then you see a 50% sell-off, which is what we saw and which is what we'll definitely see again. Now, deconstructing the driver of that sell-off, you realize that most of the sell-off was dictated by very short-term holders, people who had actually last moved their Bitcoin less than 7 days ago. So what that tells me as an investor is, okay, there's no fundamental reason beyond speculation of why people are moving outside the asset. This is potentially a great buying opportunity, because conversely, you have holders who have been holding this for so long who hadn't moved their Bitcoin at all during the coronavirus meltdown, which is indicative of strong holding behavior, which is, okay, the fundamentals there have remained the same. And so you look at, for instance, today, over 60% of Bitcoin holders have not moved their Bitcoin in over a year. You can account for, yes, lost coins, but what that really signifies is people are just becoming much stronger in their conviction and they don't want to touch their Bitcoin. So imagine analogously, you could have, a balance sheet that shows exactly which holders of Tesla were selling at which points, for which reasons, and at what cost basis they got in. That's like a very strong signal if Tesla was exclusively reliant on people's willingness to hold the asset itself.
Sure.
So that's kind of the takeaway.
All right, that's pretty cool stuff. So I want to actually unpack this a bit. So I that's what also I agree with you that, and that's where I think a lot of people in the Bitcoin community are reluctant to acknowledge is the importance of Bitcoin's value based on demand. You know, I mean,
Yeah.
it's at the crux, I think, of the argument. And I tell people like, if I was invested in Bitcoin, I would be like a hawk, a religious hawk, looking at demand and selling and buying.
Absolutely.
Like that is the key. You know, that's what you want to look at because the value of Bitcoin is determined by demand.
Certainly.
And I think a lot of times, you know, and that's where that I think. So I think in that sense, you know, we're in agreement of how important demand is, and then thus the next thing is how important it is to track that demand, right? Just to monitor your investments, and that's why I think the people in the Bitcoin community who are really in touch with the demand. And from the true believers, the big money, and they're at an advantage compared to the person who bought Bitcoin in Square or Coinbase and he doesn't even know what's going on. He just buys the hype, you know? And in some ways, I think those people will exit if there is real problems, meaning they're going to see the demand like of the long-term holders like exit big time. And they're going to be like, wait a minute, is this like, this could be in flux. There's something going on, right? I mean, would that concern you if you saw like a big percent of the early, like the long-term holders of Bitcoin exit their position in a short period of time?
Yeah, in the short to midterm, that would 100% concern me. If you saw a massive share of holders greater than 5 years start to mass sell their Bitcoin, that's something that one, we keep an eye on, and two, would indicate, okay, either something's happening that we're not aware of, or you know there's something brewing that we haven't seen yet. And so there are divergences that you can detect that can inform you of the mid-term price action. And to your point, I think that what's really important is that there are several layers to how granular you can get about analyzing Bitcoin as an asset. As ideologically aligned as I am with Bitcoin, I am also an investor. And what that means is that, there's, first of all, volatility. We love that. I mean, at ARK, like volatility is our best friend. And so the idea that you can't capitalize on that volatility by creating analogous valuation tools and actively managing around positions, I think is something that either is going to become people are going to become increasingly aware of if they aren't already. But I envision a world where you will have dedicated on-chain analysts looking at Bitcoin's demand levers or supply and demand behavior in the same way that you have an equity analyst. And to be the best investor at a large scale, it is crucial to look at kind of the I would say less so day to day, but really month to month holding trends that Bitcoin presents.
Yeah, I mean, I completely agree with that because I'm like, if I'm going to be a big holder in Bitcoin, I need to know like the demand, the supply and demand, what's going on with like who's buying, who's selling, right? Because that is so important to the future price of Bitcoin. I mean, on your point of volatility, like I agree. Like in some ways, Bitcoin's volatility, in some ways, is remarkable in some ways because it shows like its resilience as well, with its future being kind of so up in the air of what it's going to be like, like whether it's going to be a $1 million market cap or $100 trillion market cap in like 10 years, like with that unknown, and to have relatively, low volatility for that type of, such crazy binary outcomes in the future, it's actually quite remarkable. I call Bitcoin kind of like a cockroach, it just refuses to die.
It just keeps coming.
Yeah.
The volatility usually is on the upside. And that's the thing. Sure. You can't have 100x, 1000x returns without volatility. And so it's like a constant sort of trajectory. And for some investors that volatility is hard to swallow.
Yeah.
But if you actually look at it on a risk adjusted basis and you incorporate, if you have like a moderate portfolio that consists of equities and bonds and real estate and whatnot, that volatility paired with the lack of correlation ends up netting lower volatility
Sure.
in the long run as an overall portfolio.
Mm-hmm.
So
yeah, what's interesting about all this is, like I personally like attribute Bitcoin's value to value by popularity or value by demand, and it's more analogous, I think, in some ways to like collectibles. I say artwork or something where it really depends how much people value that. That's going to increase the price or lower the price of that, collectible. It's different in some ways than a value by intrinsic value, if you consider intrinsic value as like future dividends discounted today. And in that sense, it's like, I think the attitude toward Bitcoin needs to reflect that type of valuation paradigm where, hey, yeah, this is value by demand. It's not negative in a sense, right? There are many things valued by demand, valued by popularity. It's historical, like there's a lot of stuff. And so, but when you have that framework and you understand that that's the essence of it, then you can take the next step, which is to monitor demand and monitor your investment. Just like if it's investment by intrinsic value, you monitor the company, the health of the company, right?
Yeah.
In the same way, you monitor the health of demand for Bitcoin. That's your kind of your next step. What concerns me a lot about the Bitcoin community or the talk going around is that they argue against that in a lot of ways. They go, no, it's not demand. It's like it's the only true scarce asset around, and it's you can never make another Bitcoin. It's always going to hold its value. They have these strange like constructs coming up of valuation where it's like, it's just like it doesn't.
I gotta probably send you a list of Bitcoiners to follow.
Yeah, I mean, like I've done a ton. I mean, okay, tell me.
None of these ideas that I've said are really new, and I think that a lot of the stronger voices have would tend to agree.
Who are like the two top, you would say, clearest thinkers in terms of Bitcoin that you think you would recommend?
I'd say Nick Carter. He runs a fund at Castle Island Ventures, and a lot of my thinking has been influenced by him. I would say someone who would probably be equally as skeptical as you in some ways, and yet is a big Bitcoin proponent, but I think is probably the most skeptical Bitcoin proponent, and increasingly is getting backlash for that reason, but I think has done a tremendous job expressing his views, is Hasu. He's a pseudonymous account. Hasu, HSUFL is his Twitter handle. These two, I think, are very strong, and don't, I would say, don't buy the whole like scarcity is the only thing that matters. Scarcity needs a little bit of context.
Yeah. It's hard for me to watch Bitcoin stuff because it's like every other sentence that like some people are saying, I've got like 10 like objections. It's like just fundamental like logic. Like there's some people out there who are like, Bitcoin is like the only deflationary asset out there. And that like, there's this like the rounds going around with that. And like on a few levels, the logic just like is mind blowing. Like first, like, I think what they mean is like, it's maybe a anti-inflationary hedge or, inflation that might not be, that will keep track, be somewhat insulated from inflation. I mean, for example, you take something that, like real estate or even like other, maybe even commodities or et cetera, you could say, oh yeah, those are, possible inflation hedges. But like Bitcoin, if you look at it as a digital asset, and if you look at it as an asset driven by demand, what determines the value of that asset, it really is demand, right? And you could say that inflation will increase demand for this asset, right? And that's possible, but it's not like guaranteed that just because we have inflation, that demand for Bitcoin will increase. And therefore, it's like Bitcoin, it's like its deflationary nature to me. It's like, it's kind of questionary. To me, it's not this unique, sole value proposition where, hey, if there are other assets like real estate or commodities, to me, the unique value proposition is if I'm in a position where I can't put my money in certain real estate or commodities or certain anti-inflationary hedges, I'm in some country where, they could seize all my property, etc., then yeah, this makes a great value proposition. I can stick it in Bitcoin, right, as this anti-inflation hedge. I understand that concept, but people are talking like this as like they live in the US, there's not much risk of seizure, and they're thinking like, we've got to put our money in Bitcoin because it's the only way we're going to survive inflation. I'm like, it's just so, I don't know. What are your thoughts?
Yeah, again, I think that people who are too anchored on the idea of scarcity in isolation is not really where people need to focus on in dictating Bitcoin's value proposition. In fact, I'll commend you again in saying that you're able to articulate Bitcoin's primary value proposition a lot, more effectively than some major Bitcoin proponents who attempt to articulate the value proposition. I'd say that the deflationary aspect probably comes from, first off, Bitcoin is not deflationary, but Bitcoin is disinflationary. So what that really means is that there's a slowdown in the rate of increase in the issuance of Bitcoin over time. And because it's capped out at a fixed supply, which again, for whatever that's worth, then technically any real raw new demand in Bitcoin is going to increase the price levels. So that's I think where that argument comes from. I'd say the idea is basically if you were to hypothetically envision a world where everything was denominated in Bitcoin units, right? And those units, there being only 21 million, even if you are able to divide those 21 million to whatever, then if indeed we see increasing levels of demand, then one Satoshi is going to buy you more in a year than it buys you today.
Sure.
And so that's, I think, the deflationary argument.
Yeah. I mean, I get it if it's like, presented in a way like that, or presented like, as maybe as perhaps an alternative, monetary system, right?
Right.
You could say
right.
it doesn't have the inflation component because it's capped. Like, I understand that, but I think there's a lot of assumptions that go into that, yeah. I asked my Twitter followers for some questions. Actually, Bitcoin is such an interesting topic. It's like on YouTube, for some reason, my Bitcoin video is just like, I think YouTube for some reason, I don't know if they've suppressed these Bitcoin videos because it's sensational or something, the topic by nature, but it's something, it's so strange. I don't know what's going on, but anyways.
They're not getting as many views, or they're getting
yeah, like my video with Pomp, it was one of my lowest performing videos for the first 48 hours. Like it was like so strange, but now it's just picking up where it's like, a very high performing video. I mean, it might be getting on search or some other things. I don't know. I don't understand the exact dynamics, but I asked my Twitter followers about Bitcoin and about what they wanted to know from you. And we had, a ton of people, and the top question or liked question was, what is ARK Invest's hiring process, and how did you get hired by ARK? So I'm curious, can you share any insight on that?
Absolutely. So by way of background, I went to the University of Pennsylvania. I studied systems engineering and finance at Penn. Fell into the kind of crypto Bitcoin rabbit hole my junior year, so early 2017. And was fortunate enough to have found an internship opportunity at a venture capital fund that summer. And they allowed me to kind of dive into the crypto space from a tech and investment perspective. And then from there, I had actual time to say to myself, this is what I want to do full time. So my approach was, I just want to find something full time in the crypto space. So that summer, I also created a Twitter account and just started tweeting and following, a bunch of interesting people in the space, and came across ARK through Twitter, actually, where their former analyst, Chris Bernisky, who now runs Placeholder, a venture capital fund focused on crypto assets. I just started following his stuff and saw an opening, but it was very, very informal. in my reaching out and saying I'm very interested in this. I would say for any recommendation, or if you're young and you're looking for a new job, there are a few very interesting realizations that I had. First is that the traditional route of whether it's investment banking or consulting or private equity. So the school that I went to was very, very pre-professional in its nature. In my freshman year, I remember going in and everyone was in suits and they had a business card as a student. As a student, you have a business card. As a freshman, and you're going into like this Goldman Sachs interview info session where there's a playbook, and if you follow the playbook and you go by it, then you will land that job. And if you land that job, then you'll be able to climb that ladder. And if you climb that ladder, you'll maybe one day have your own fund or whatever it is. And me very quickly realized, like, if that's what it takes, I don't want to be a part of that. So by design, I was very, very untraditional or unconventional in my approach to finding jobs. So the venture capital fund that I interned at, which allowed me to get that opportunity, I cold emailed like 150 VCs, and like 3 of them answered, and one of them was like, okay, we'll give you a shot. I'd say ARK really prides itself on being very ambitious and entrepreneurial, and having the grit to take risks. And so there should be really nothing stopping you from setting up a Twitter account, writing a few blogs, reaching out to a few people, sharing those blogs, and then sharing that. And I think Twitter in particular is such a powerful meritocratic tool that has very low barriers to entry, but that can be extremely valuable. So don't hesitate to reach out to people who have their DMs open, to tag people in threads. All these things I think are very valuable that I realized before joining ARK. But when joining ARK was like, that was the fundamental research strategy that ARK incorporated in their own day-to-day. So Kathy, our founder and CEO, CIO, kind of prides herself on the open source research ecosystem that ARK has built, where information is increasingly becoming commoditized. In order for us to have an edge, we need to participate in this community. And whether that is sharing our research, whether that is inviting people to our podcasts, tweeting, posting things on Medium, whatever it is, it's like, the world is out. You have to believe that the world is there to conspire to help you. And there should be nothing stopping you from, telling yourself that there will be nothing stopping me from getting what I want to get. And I think that, that mindset has helped me and has led me to where I am today. And, I will end on an anecdote that I, recently actually shared with Kathy. On the first time I met Kathy, it was during in the middle of the interview process. So I had gone through a first round of interview after DMing someone on Twitter, and we set up an interview, and I was scrolling through my Twitter feed on a Friday night, or like it was late at night, and I was still in school. And I see Chris Bernisky, who's a former analyst, who posted something on Twitter after he had published a book that he was going to have a book signing. And he was going to have a book signing the following day at like 6 a.m. in New York. And it was 11 p.m. that night. And I was like, I'm definitely going to go to this book signing. So I booked a train and went to Chris. And that was where I met Kathy for the first time. So all this to say, there is no conventional route. I think ARK is very unique, and part of its success is that it welcomes originality. But in whatever it is that you pursue, I'm a huge proponent of deviating a little bit from the playbook, and making kind of your own fate in that regard.
Mm-hmm. Do you guys, as analysts, like somehow share in the performance of the fund?
I don't know if I can disclose.
Yeah, you don't have to disclose if you don't have. You don't. Yeah. If you can't.
We'll
pass on that. Yeah. I'm curious. Do you get how do you get encouraged, or how does ARK encourage you to post and be active on social media? Do they just give you full permission to post anything, to go on any interview, just anything, or what's the kind of the deal with that?
Yeah, for the most part, it's quite open-ended. I'd say that the general approach to ARK as an analyst is the analyst role is what you've defined it as. Like it only goes so far as what your ambitions are. And I think that's what's made ARK so successful in not only retaining analysts, but also, giving them the motivation to, figure out a way to do something that maybe isn't on paper what you're supposed to be doing. And in that regard, ARK's analysts and ARK in general is very entrepreneurial in its approach and figuring out, okay, here are the keys to the castle. You are covering a theme, but you are not limited in just that as your role. Figure something out, and we will be all ears. And I think that that's been, very motivating for me, for other analysts, and part of ARK's success.
Mm-hmm. Got it. Yeah, fascinating stuff. And then you're coming from, are you in Morocco right now, or what's your location?
I was in Morocco for most of the lockdown. I was there for almost 7 months. That's where I'm originally from. That's where my family is. But I'm based in New York.
New York. Okay. Got it. Yeah. I mean, the internet is amazing. I mean, we could just have this like 2-hour conversation just anywhere from any 2 points in the world. And then, thousands of people can watch this from hundreds of countries and share in this experience. Like, how would this been possible, just like 34 years ago? It's insane.
It's awesome. It's awesome.
All right. Yassine, I want to thank you for the conversation. I truly enjoyed it. I love just like, going back and forth and just, taking these arguments or these thoughts, and trying to hash them out. So I appreciate just every point you made, every, kind of attempt, and just your whole attitude to the whole thing. So wanted to, just say thank you again, and appreciate your time.
Thank you so much for having me. Happy to be on.
Okay. All right. We'll see you later.
Bye.
Okay, bye. All right, I hope that conversation was helpful. If it was, please like the video. It really helps it out. And subscribe to my channel for further updates. I've got some great interviews coming up, and I've got some great company analysis and other investment philosophy videos coming up as well. My channel really is about thinking differently, about critical thinking. It's about looking at the world and investment topics, trying to get beneath the surface of things, not just trying to accept the traditional view or what the herd is thinking, but really trying to think for ourselves and understand things from a clear kind of first principles type of view. Also, all of my videos are also available as an audio podcast. Look for Dave Lee on Investing in your favorite podcast player. And I'm also on Twitter. I'm active there as well at HeyDave7, and you can go ahead and follow me and engage with me on Twitter. All right, hope you have a great day, and we'll see you in my next video. Thanks.